Well, good morning and welcome everybody to our monthly webinar series, Beyond the Field. I'm your moderator, Amanda McLean, the Farm Management Specialist here at North Dakota Farmers Union. Thank you for joining us today. The purpose of today's webinar series is to share timely information and offer in-depth conversations with our industry experts. These webinars are held the third Thursday of each month at 10 a.m. Central Time. Today, we will be covering Bank of North Dakota farm loans with Bruce Schumacher. Before we get started, just a few quick housekeeping tip items. Everyone is currently muted, but we welcome your questions at any time. Please submit them through the Q&A box found at the bottom of your Zoom window. We will address these questions at the end of the presentation. This webinar is being recorded, but if you would like to find it and rewatch it, just go to YouTube and search North Dakota Farmers Union. Lastly, we ask that you please complete the exit survey after the webinar. Your feedback helps to continue to improve this webinar series. With that, I'd like to introduce today's guest speaker, Bruce Schumacher. Bruce has been employed with the Bank of North Dakota for over 30 years as a business banker. He was raised on a family farm south of Napoleon, where his brother still farms. He graduated from the University of Mary and began working with Stock Growers Bank in Napoleon. He then spent 3 years with Wells Fargo in Minneapolis before moving back to North Dakota. Bruce is also a certified athletic trainer working with local schools and the college. Bruce is married to Christine and has an 11-year-old son named Alex. I will turn it over to you, Bruce, to inform us today. Thank you.
Well, thank you for having me. It's great to be here, visiting with you about our programs, giving you some updates, and just kind of giving a quick overview of what the programs are. So if we can go to our first slide. As you can see, as what we do at the Bank of North Dakota, we don't originate. The only loans that we actually originate are loans that are direct loans, which are farm real estate notes. Um, that will go through those with the programs. But also what we mainly do is work locally with your local financial institutions, whether it's a credit union, a bank, or a farm credit system. We can work with all of those institutions that we have with them. You know, you work with your local bank, we work with them, and then we kind of come up with kind of the best program for you guys that may work for your particular situation. But like I said, we really, what the idea is that we try to be part of it as a partner with you and your local bank and to kind of find you the best solution for it. We can advance to the next slide. So the first program is that we'll talk about is our beginning farm real estate program. This is a direct loan through us. When I say direct loan, that means you would apply directly to us. For the loan for the purchase of real estate. We would originate the loan, do the documents here, your payments and everything would come directly here. The basic qualifications for a program is your net worth can't be over 1.5 million, your primary occupation farming, and you can't own more than 30% of the average farm size in your county. And each county has a certain acreage that we have out there that you can find out on our website or with the application that you can see what the average is. So if you meet those qualifications, that's kind of the basics of the program. And it's used for the purchase of farm real estate in production. What we don't do is like if someone's looking, we have many calls that people are trying to buy like just a farmstead or a house out in the country and things like that. This really isn't used for that. It's mainly for production agriculture of the land. So we generally see tracts, you know, in that 80 acres and plus that they would buy. The loan is made to an individual. It can't be made to a corporation or anything like that. It would be to you as the individual. And then you do have a lifetime cap of 1.2 million for this program. And that could be over a series of loans, but each time you would apply, you'd have to continue to meet those qualifications. So if you've used 700,000 now and you buy another piece of land and now it's over, your net worth's over 1.5 million, or you own more than, you know, the average 30% size, you wouldn't qualify anymore. The primary occupation farming doesn't mean you can't have a non-farm job, but you do have to be actually using this land as production. You can't buy it and you rent it out to somebody else. Our interest rates, you can see our B&D base rate currently is 675. So you can fix it for the first 5 years at 1% under that. Um, and then the remaining the 6 or the 10 year, it's variable at 1% under that, and then it would float at prime through the remaining term. Or you can fix it at a prime rate for the first 10 years currently, like I said, at 675 is prime, so you'd be at 575. Then the remaining term of the loan would be variable at our base rate, and our base generally falls in line with Wall Street prime. You can go to the next screen. The established farm rate is the only other direct program we have. Um, and you do need to, the land does need to use again for agriculture purposes, or the collateral it may be. So established farmer, you don't necessarily need to be a farmer rancher, just has to be, you have to be a North Dakota resident and North Dakota, and that needs to be North Dakota land. So if you are a non-farmer possibly, or you have someone who comes in, if you're talking to a lender, they can apply through us directly, but the land itself has to be used for agriculture purposes, and it does need to be North Dakota land. And I should have said that with beginning farmer loan also. Again, you have to be a North Dakota resident, and it has to be the purchase of North Dakota land. The total maximum is $6 million. We have different rates and different levels of pricing on this one. This one is more at a current market rate. Our rates are probably very similar to you'd find at a local lender. The difference probably with B&D's established farmer, most local lenders probably wouldn't fix the rate above 5 years. We have even all the way up to a 25-year fixed rate. We have variable adjustable rates, 1 year, 3 year, 5 year, 10-year fixed rates, and 10-year adjustable or 25-year fixed rates. And our amortization is 25 years done the established farmer program. The established farmer will go up to 65% of appraised value. And I should go back and say even on the beginning farmer, it's 75% of appraised value of the land. If there are structures on it or buildings, we go 50% of the value of the buildings on that. With the beginning farmer too, you can use FSA. So generally B and D will come in a first position on a beginning farmer loan. And then FSA can come in with their program in a second position. So generally we'll do 50% of the loan on a beginning farmer. Um, the FSA can come in with 45%, and you only have to come up with 5%. And that was the beginning farmer. I apologize, I should have said that initially there. But the established farmer, like I said, generally we'd always do need to be in first position. A local lender can come in, or someone else in a second position. The established farmer, you can refinance land as well as purchase. Where the beginning farmer, it is for the purchase only. And we can go to the next screen. The Beginning Farmer Chattel Program is a program we have had now for about 25 plus years. This is a loan for a beginning farmer that qualifies as a beginning farmer, similar to qualifications as you saw with the other beginning farmer, is that it's for the purchase of equipment or livestock. It's not a refinance in any sense. It's only for the purchase. So the benefit of this, you can see, is that this part of the loan has a buy down on it. So the local lender, say they charge you, it buys it down by 4%. So say the local lender itself would charge you we'll just say 7% for just thing on their portion of the note. We buy theirs down by 4%, so you end up paying 3% on their share. Our share, we're fixed, like currently we'd be fixed at 5.75% on our share of the note. So that savings that it'll have there from buying down the local lender's rate is a huge cost savings for them. And these will go anywhere for a term of 5 to 7 years, as you would on a normal chattel program or chattel purchase program on that portion. And these wouldn't be used for operating at all. Like, so if you're buying short-term feeder cattle or something like that, we would not use this program. It's more of a term program. Go to the next screen. The family farm program is one we don't see as much usage of this as we did in the years past. mainly because of our beginning farmer. But this one you can use for refinancing of equipment, land, or livestock. It could also be used for buying real estate, making improvements on the real estate, some type of a structure. Could be terming out some type of um, operating or carryover funds and things like that. Again, this is a participation loan. Again, net worth again it has to be under 1.5 million. Here, B and D again on our share of the note, we can take up to 90% of the credit. Our share would be at that 1% below our base rate, or we could fix it as a variable rate, 1% below, or we can fix it at our B and D base rate for it. And then your local lender can't charge you thing at 2% over our base rate or a fixed rate of 3.5 over the Federal Home Loan Bank on their share of it. But this is more for like a restructure or refinancing. That's generally most purchases we're gonna see under the beginning farmer credit because it's a little better interest rate. Where here we'd see more of a refinance under this program. And our next screen. The farm operating program is a loan. Also, it's a lower interest rate. This is just your 1 year operating note. So your net worth here, your debt to assets must either exceed 50% or owner's equity under 50%, or with a net worth of under 1.5 million. This is kind of geared more towards a more highly leveraged operation or kind of more of a beginning farmer type of thing where they may have like that interest assistance, a little tougher credit, cash flow for it, and this will buy down your interest rate. Again, as you can see, kind of a common theme. We're going to be variable at one under our B and D base. So today we'd be at 575. And your local lender again cannot charge more than 2% over that 675. So their most they could charge is 875 on their remaining percent. And here we would take 65% of the total loan of it. And this is just a 1 year note. We would, ask for an assignment of the government. The local bank would have the assignment of the government payments or crop insurance and things like that. So this would be just a 12-month loan for you. It's not a could be revolving during the year, but it wouldn't be revolving into the new year. You'd have to renew this each year. Our next program is our egg pace. This is probably the thing we've seen the most growth of over the years as far as the more usage of it. The egg paste program initially started off as it was looking for farmers when they were having problems more in the early 80s, is trying to find them a different source of income. So it was considered non-traditional agriculture. So this is where you saw the people would take a product and maybe take it to the next level. If they had like soybeans and they made them into we had a company once that made them into it was almost like a corn nut thing. They were taking that product into that next level. It may be on-farm businesses. They had a farmer who was probably welding on the side, had a little welding shop at it, or the spouse may have had some type of a side business and things like that. That's kind of where it initially started, and had a lot of success with that. The Pride of Dakota years ago, I would say half of those things were probably financed through the egg paste program. So as we've expanded our egg paste program, we've included them into tiling now. If you're field tiling, we can do irrigation. This would all be for new irrigation acres. It wouldn't be for any like replacement of things. If you're buying, investing into any type of startup plants of North Dakota products into here, like Dakota pasta growers back in the day, they could buy shares into that. The other thing it does allow also is for capital improvements into a livestock facility. So we're seeing hoop barns, things like that. Smaller feedlot operations, improvements on that are for dairy operations to make these improvements on it. And then there's also they can buy equity shares in commodity grain storage, and we haven't seen. I don't know if we've ever done one of them. That part of it hasn't taken off really so much in North Dakota, but it is open to that. Um, the rates are kind of set locally, so they're just priced at normal market rates. So say again, your bank is going to charge you 7.5%. This program buys it down by 4%. So your bank is still earning 7.5%. We pay the difference of that 4%. So you end up paying that 3.5% on, and the fund buys the difference. So with everything except tiling and irrigation, you would have up to, you can get $20,000 buy down per project per biennium. You'd have a lifetime cap of 60,000. Now, if you're doing tiling, it's a 2% tiling or irrigation. It's a 2% buy down, and there you can get up to 50,000 of buy down per lifetime. Now, if you're doing a new irrigation, you could get additional 40,000 of buy down. So that money would come through the North Dakota Water Department, and they buy down that additional portion of it for us. And so that's something that 2%, you can see there again, there's the 50,000 on the subsurface tiling, and then the irrigation where the other stuff would have a 4% buy down. And that was a change just this past August, so that was changed to that part of it. We see a lot of usage of this program a lot for tiling, irrigation, things like that. And we do still see other projects, a lot of livestock improvements that are using the Egg Pace program for it. You do need to be a North Dakota farmer, and you do need to, you can't just be a renter even for tiling. You need to be actively farming for the Egg Pace program. So if you have a borrower who has land, rents it out, he would not be eligible for a tiling note. Okay. You can go to our next screen. The biofuels pace, similar to the idea of the egg pace, the difference is this is probably used for larger facilities, bigger feedlots, more construction. The difference of this one that you can see on that third bullet point, we have up to 250,000 of buy down, and this is a 5% buy down on it. So where the other egg pace is only 40,000 with 20,000 per project, this would have the 250,000 buy down on it. And mainly what we've seen here is mainly, like I said, the construction of real estate, which is mainly livestock facilities. It has to be related to livestock, whether it's dairy or egg. Go to the next one. So if you don't really qualify for any of those programs and a local bank is just looking to participate, we just call it our farm and ranch program. I always say kind of it's like none of the above we would use. So this is just at normal rates. Our rates and our terms are all negotiated with your local bank. Um, so where we see stuff like this, if a bank is looking, say they're hitting an overline, like if you borrow, each bank has a lending limit. If you're kind of hitting their lending limit with them, they would participate a portion of it with us. It may be risk sharing. It may be able to give them a lower interest, give you a little bit of a lower interest rate if we're participating in it with them. Um, there's a number of reasons, and this is open to anything really. I mean, you can say everything is listed there, which would kind of go back to all the other things too. But this is really just kind of a catch-all of all of our programs. The Egg Diversification and Development Fund. This is for value added again. Looking more at, this is more of a larger product, or larger program or facility, things like that. So this was approved a few sessions ago by the North Dakota legislature. And this would include projects more like, as you can see, food production or processing facility, feed or feedlot process, commodity processing. It's really taking that product that's grown here, produced here, and taking it up to that next level and kind of making it more of a thing. This can either be by a loan or it could be by a grant. You can kind of see the different dollar amounts that are eligible there, things like that. We do see a little bit of this, not a lot. So if you do have such of a larger product, just kind of ask you to give us a call. We can kind of walk through this program with you. Um, there's a lot of different parts to it, but if you have any questions on, just give us a call or your local lender, and we can kind of team up with them and kind of walk you through this program a little more. But it's generally more for larger facilities. It's not necessarily individuals that would probably use this one as much. The FSA guarantee purchase, what we do is if you have an FSA guaranteed note currently on a guarantee on your current loan, B&D can purchase that guarantee from your local lender. Now, our interest rate's going to be much lower. So what they are to do then is to pass on that lower interest rate on to you. So say they were charging you 7% and we're buying that guarantee, somewhere at that 4 or 5% rate, they would bring their interest rate down for you so you have a savings of that. So B&D wouldn't be part of the loan at all. We're just carrying that guarantee for them. And the idea is that then it's to turn around and pass on a lower interest rate to you, your local lender, with that program. And our next slide. So this is probably where we're seeing a lot of our activity currently. B&D has done a number of disaster notes over the years, whether it's on the farm side, whether they've been weather related. We've done some on the commercial side for flooding, housing, also with flooding years ago in like the Minot, Bismarck area, different places like that, Grand Forks. So we always the idea is that here at the bank, that we can come up with a program fairly quick and get it implemented and sent out and responding versus if we're waiting for more on a national level, it's going to take a lot of things and hoops to jump through. So that's kind of the advantage of the Bank of North Dakota being able to do. So currently, last year we had a farm disaster program that helped you kind of restore your working capital. That was probably last year and at this time. And then in the summer, because of the storms that went through and caused a lot of damage to grain facilities, grain storage facilities, and that we came up with another program. And now starting back this past December, we opened the 2026 Farm Disaster Stability Program. So the Farm Disaster Stability Program is a program, again, you'd go through your local lender. It's a program that if you could have experienced some type of a loss, if you can show an operating loss in the last year or two, or some type of a net worth loss in the last year or so, we can do it's almost like a balance sheet restructure. So we can consolidate some of that debt to help you restore your working capital, and roll it into a new loan, a term loan. Our current so if it's on chattels, we can amortize this out over 10 years, where your normal thing is probably anywhere from 5 to 7. If you're securing it with chattels, it does have a 5-year balloon. So after the 5-year balloon, your loan would mature. Um, we do also have the option to have interest only for the first 2 years. We can also do it secured by real estate. Again, we would stay at that 25-year amortization, but it would have that balloon after the 5 years. One of the biggest advantage of doing that is hopefully it's going to stretch your payments out over a longer time, hopefully increase your cash flow. After that 5 years, hopefully everything is back in order. You can pay, you can go back to traditional financing with that loan, with that debt you have there with the local bank. Now on B&D share of that, we're going to be fixed at 375 on our share, and we can take up to 75% of that note. Your local bank again is kind of limited to how much they can charge, not to exceed 1% over our base rate on their share, on the remaining 25% of the note. Uh, and that would be then we can borrow up to 3 million on chattels and up to 6 million with the program on a real estate deal. And like I said, and we also does have interest only. We also have a grain inventory loan program. So that's if you're still having, you still have grain that hasn't been marketed yet from your 25 production, and you're going to try to carry that into the next year. Again, we can take 75% of the note. On our share, we're going to be at 6% currently on our share of it, and the local bank also can't charge you more than 775 on their share of it. And again, we'll take 75% of the note, and this one would mature then in December 1st. So it's kind of a short-term deal. And it's secured by that grain. So once that grain is sold, as you're selling the grain, you would pay off. The debt would go, the proceeds, would go to this debt on the grain inventory note. And next. So with that, I will open it up for any questions that have may have been out there. Kind of gave a quick overview of the programs. If there's things you're looking at more detail, contact your local lender. You can contact any of us here in the area also.
All right. Well, thank you, Bruce. One question that came through. On the farm financial stability loan, can one borrower do both up to 6 million or the 3 million on the
Chattel?
chattels? Yeah, for a total of
Yes,
9 million.
correct, you can.
Okay. Um, Another question. What upcoming changes on new programs should producers be aware of in 2026? And are you guys seeking any legislative authority for new programs in the 2027 legislation?
As of now, we haven't looked at any new programs at all that would be coming up in the next session. We're always looking at the existing programs and seeing if we can make modifications to them, whether to make them to adjust to the times. And that's kind of like egg pace. We've kind of adjusted that almost seems like every couple years just to kind of to fill that need. Um, there's nothing that we've heard of new. Um, if there's certain needs or gaps we're looking for, that'd be something we'd talk about. The one thing we try not to do, and even like if it's come up with grain storage, if there's a program like FSA has a great grain storage program, we try not to duplicate programs that you can get elsewhere. We never want to be seen as competition and things like that. So so we always kind of look to see is what need isn't being fulfilled out there, and is there something that B and D can do to fulfill that gap? I mean, and that's kind of, when I started here, like I said, Egg Pace was just starting. We eventually started our chattel program. We've expanded beginning farmer, increased lending limit, the limits, the dollar amounts we can borrow, the minimum net worths and things like that. So we're always changing or making adjustments to our programs. Um, but as of now, there's nothing we're looking at that's really new that we would be adding, probably just more enhancing than anything.
Okay. Um, can the financial sustainability loan be utilized to buy new land?
No, it's only for refinancing of debt. It's not for any type of purchases of anything. Also, we do exclude capital purchases that were made in the last year. We wouldn't roll into the new program.
Thank you. What is the current response time back to the bank for the sustainability loan on this time?
Um, we're currently probably about anywhere from 10 to 15 working days, and a lot of that has to just do the volume that's come in with that program as well as all of our other programs, whether on the farm and the commercial side. That we have. What we do ask, though, if you are sending in an application, if we have lenders out there, we do ask, that you should try to get everything in as requested. We do want to see their 25 income and expense numbers. If they don't have the tax return done, we do want some type of 25 and income and expense numbers, updated balance sheets, projections, and then your normal historical thing of tax returns, financial statements, credit bureau reports, things like that.
Okay. What would be the best option for someone wanting to start an agritourism project business, but also looking to have our main resident on the same property as well as that business?
I mean, there could be a portion of it that if they are an active farmer, a portion of that possibly could be used under ag pace. We wouldn't be able to finance a residence, as in a sense, at the home if they're living in it. Um, there you're kind of getting into different type of lending ish laws with residential housing and things like that, where we don't do that with the program. So you couldn't buy a home for it, but if say you have some type of a side business, you needed something for whether some type of equipment and things like that, you could utilize egg pace for that. But to buy an actual home of a residence, we wouldn't be allowed to do that under egg pace.
On the farm financial stability loan. A borrower has a current livestock loan with the Bank of North Dakota. If all debts are being consolidated, can we leave the Bank of North Dakota share of the loan alone if it is currently at 3.5%?
They can roll that in, but it would be both portions. We can't just keep our share of the loan out there. We'd have to refinance our share as well as the local bank share of that. If like a beginning farmer chattel loan, I'm guessing is what they're talking about. We would have to refinance both of those shares into the new program because that loan is governed by a participation agreement that says all payments and advances are made pro rata.
Um, can the industry commissions adopt or improve new Bank of North Dakota programs, or does the legislator need to?
Um, Probably both. I'm not 100% sure on answer. The legislature can do some programs, but like when we have these disaster programs and things like that, that all goes through the Industrial Commission.
Okay. Um, I guess as a can you elaborate on how the Bank of North Dakota collaborates with local financial institutions to support producers and what partners with those partnership, what does it look like from a farmer's perspective? What do they need to know and do?
Yeah. So we can work with any North Dakota bank for any North Dakota resident. We can work with non-North Dakota banks too, if they're working with a North Dakota producer. So we do stuff over the border with banks that have agreements with us if it is to a North Dakota producer. So the idea of the Bank of North Dakota is a number of reasons why we participate in a loan with them. One, it could be risk sharing. And that's kind of why we have some of these beginning farmer chattel programs operating, disaster and those things like that. It may be overline positions that they may have with them. And it may just be sometimes it's just the comfort of a local lender, maybe a new borrower to them. It may be like if you kind of get into some of the even the commercial side, they may not be as adverse in some of the businesses that they may be in and want to kind of something kind of share that risk or also share the knowledge that we have because we do see many different types of loans from all over the state. So that's kind of why they do. And the idea is that we always want to try to keep, we're only working as a partner. We don't ever want to outdo. We want you to keep that business in your local bank, and we want that relationship there with the local bank. We depend a lot on the local bank. There's a lot of things we can look at as paper when you go through the 5 C's of credit. We understand that it's that character part that local bank is much able to handle with us. And there's many times we may call and say, "Hey, so what am I missing here?" And the guy, they'll kind of give us an overview of the guy, the farmer, the producer, just trying to letting us know, like, here's who he is, here's what we've done in the past, here's his history. Those are things that we can't find that you're not going to find on a balance sheet. And that's why we really depend a lot on that local lender to be that. And this way, to all your payments that are done there locally, you're not, you really don't even really realize that we're involved in it.
Awesome. One other question. So as you're talking about sometimes working with the different banks and stuff, what are, just for a lot of producers, what are common mistakes in farm loan applications and how can, as a producer, avoid them? Is that just kind of working with the local bank or the credit union that they'll help collect that information and kind of make sure that the application is right? What are some of the best tips to get around some of those no-nos
Yeah,
and making sure you
yeah,
get the
yeah,
application?
and I think most of it is just the timeliness of getting that information to your local bank that we're requesting. This time of year it's kind of tough because you're kind of transitioning from the end of last year, trying to look into next year, now with the unpredictability of whether it's grain prices, moisture, too much moisture, when you're going to get in, even what you're going to grow. So it's really you getting into your local lender, visiting with them what your plan is for 26, providing them numbers so that we know kind of how you ended in 25, things like that, and really just getting bringing that information to your local bank that we can help them with a loan for you.
Awesome. Well, thank you, Bruce. I don't see any more questions coming in, but we definitely had some really great questions come in. I think we answered all of them. Um, Shout out that you're looking really good today. So, um, from Ryan. Anyways, well, thank you again, Bruce, for joining us today and sharing your time and expertise. As always, this presentation from Bruce will be shared with everybody and a link to the recording if you want to watch it later. We'll also share Bruce's contact information if you want to reach out to him directly about some questions that you came up with afterwards. We ask that you join us again next week or next month in March, on March 19th, because we will have the state FSA office joining us, and they'll be covering some of the new changes and some of the payments that producers are getting with the bridge payments and explaining all of that and the ARC and PLC changes that are happening. So we hope that you join us then, and thank you for joining us today, and hope you have a great day. Thank you, everyone. Bye.
Thank you.